TheoTRADE chat, it's Don Kaufman here. April 10th, 2024. Just about 3.5 minutes to go to the cash open here on this Wednesday, CPI morning. CPI comes out. It's a hit. No, literally, CPI came out. It was hot. It's really hot. It was hot not only in the month over month, but it was hot year over year. That's not good. It's not good. We are well off the lows of the overnight session. Lows being in the S&Ps here, 5176. A couple of notable things. In a trading session like this, you want to come in, you want to start to handicap right off the bat, right? What's going to happen? You have no idea. Real order flow hasn't even played out yet. So we're going to be in a fairly heavily correlated state into the open, which indicates if you take a look at like the S&P 100, it's going to be ugly. There's no question it's going to be ugly. So the other aspect that is ugly is we're doing some of the largest contract size that we've seen in a very considerable period of time. So again, some warning shots being fired. But hey, look, the S&Ps are down 65 handles. The expected move this week is almost $90. So I think you have to put a little bit of perspective on the overall price action. Okay, we ain't home yet. The big number that's going to come into play today, though, is going to be down here in the SPX, which is just below 5120. We hit the lower edge of the expected move. All right, I'll bite. It's about 5115. I'm just going to round it to 5115 or 5116, whatever does it for you. But as we come into the cash open, we're not there yet. We're not testing into those lows. We're going to open in or around like this neighborhood over here, and there's still again quite some distance. So as I was saying, we're way off of the overnight lows. And I think that leaves a little bit to be desired. Volatility is definitely up. Bonds are getting rocked. Bonds are seeing catastrophically large volume at this point in the morning. So, stay tuned on that front. The bonds have also, though, maybe rallied back up a little bit. I don't think they're done. Again, when the cash open happens, you're going to get this order flow piling in. Look, it's run for the hills a little bit here. You're seeing financials down about 50 cents. Big move. The energy sector, okay, the bid offer spreads in here, it's too wide to even read, but it's going to get whacked back a little bit, even with oil up. Underlyings like NVIDIA, they're not taking the dramatic hits that you may have expected. Okay, they're not taking some of the dramatic hits. Like tech is definitely taking it, on the chin, but look, it's only down, 1.2%. So again, on a morning like this, like Google, totally unchanged this morning, literally unchanged. There are still pockets. It's not that bad. Apple down nominally. These stocks have been hit. Microsoft's going to take a bigger hit. Meta is going to take the hit this morning. So as you come into the cash open, again, I don't have a lot of preconceived notions about what this is going to look like. Even a few minutes, you're going to be on big negative ticks. You realize that, right? Big negative ticks, ugly advanced decline line. Let's come to today's cash open. There you go, your full-blown correlation to the downside. This is nowhere to run to, nowhere to hide. There are many stocks that are seeing significant order flow imbalances and are not opening. All right, so you're going to get another push here, possibly a little bit lower. Look, there's a bunch of big stocks that are not presently opened yet this morning. That deals with heavy volatility, big trades coming in early on. You can see right now you've got still waiting for a number of stocks to actually open. Haven't seen that in a long time. The ticks, they don't get more negative than this. The tick is riding on a negative about 1600 right at the cash open. And I have to tell you, some of the price action that you're seeing on the screen right now, it's totally muted. Like you pretty much have to zoom in to right here this morning. So what is taking a little bit of a hit this morning and what's not? As I was saying, Apple, kind of get the feeling it's already been beaten and bludgeoned, but Apple is at a very critical level here, just below the 170. Meta down about 2% this morning. Saw some sell side activity yesterday, but recovered nicely. Again, I don't have a lot of preconceived notions about what this is going to look and feel like. The one thing, though, I can tell you is we hit that one right on of where we're going to open. Like, I'm not going to jump in here. There's no bullish trade right now. You want to get as bullish as you want to get. It's fine. But we have a long way to go, to the lower edge of the expected move. And I want to quantify exactly where we're at, kind of give you like a little bit of orientation. First of all, do we have to get down here? No, but it's an incredibly high probability for a trading session like this. You're out in the middle of nowhere right now. When I say that, I'm not trying to be facetious. There's not a lot of levels, in the S&Ps or the SPX over here. You can say anything you want, 50, 51.95, whatever. It doesn't make a difference. We're just out there. Not a lot of levels to latch onto. So hedging activity, okay, is what kind of dictates movement in a situation like this. We have, again, this week approximately 88.79 expected move. That's the expected move for the entire week. Actual move right now, we're not home yet. Actual move is 50, 60 bucks. That's it. So here is the starting place of the week. Here's where we're presently trading. Again, pretty good probability if you see any more sell side activity, we get pushed right into the lower edge of the expected move. But as I was saying, there's days like this where kind of got to sit back and sit on your hands a little bit. And when I say sit on your hands, that basically implies don't do anything stupid in early trade. Okay, there's not great risk rewards obtained in a market like this. And the reason there's not, when I say risk reward, I'm really referencing, for a lot of you actually that trade options, you're going to look at the idea of, should I buy a put, should I buy a call? The expected move, even on an intraday basis, okay, is huge right now. I mean, you've already seen a 65 handle move, right? Okay. And yet, hold on, let's go over to the SPX. Let's put this in SPX term. You've already seen a 65 handle move or 60 move in the $60 move in the SPX. There's still almost $36 of implication from here, which implication of more risk to the marketplace. That would actually satisfy the lower edge of the expected move. I mean, that's in effect what I'm saying over here is, and it's not a great risk reward. If we go down another, 20, 30 bucks, that's what's going to take us here. And I'm sorry, that trade, you can get all the bearish you want. You're going to pay an absolutely ridiculous premium to try to ride S&Ps higher or lower today. Ridiculous premium. It's not valid, I think, to want to do so in early trade. The validity of that will be seen if volatility gets crushed at some point. Now, of course, some of you are probably thinking we could still rally back up. Maybe, but this some real damage being inflicted right now. I think if we're going to rally, I think you have to see bonds start to proceed a little bit higher. Bonds, to me, I mean, obviously, I can see what happened, here. Okay, I still think they're going to roll back over. That's just what I would look for as this day kind of progresses. I'm actually rather surprised that the bonds are not down more at this point. I really am, and they are already doing almost 300,000 contracts. By the way, we didn't look at the notes in the pre-market. It is some, again, absolutely monumental volume. You're going to see one of the biggest days in the notes in recent history. By the way, there's some big volume in here, but that has to do with the roll. That doesn't really count. It's a roll. That doesn't really count. It's a roll. Big volume is like out here, and you're going to see that kind of price action today. So again, I was saying this a little earlier, and I can't reiterate enough. Don't look, for wild and woolly moves. If anything big is going to happen here, probably going to, as you're looking at this open, you're like, this is not as exciting as I would have thought. And it shouldn't be. Okay. The market kind of repriced itself immediately, okay, on that CPI number. Right now, you're just waiting for, again, the next shoe to kind of drop. And again, I would believe that we're going to resolve maybe a little bit lower from here. And I'm only taking that because I think it's a higher probability. But if you're looking at products like NVIDIA, okay, here they come. You're getting it, the initial attempt at a dip buy in an early trade. Categorically speaking, though, like I just don't think that using the term buy the dip works anymore. What you're getting is a rush of traders that are actually buying calls. They're buying calls. The stock is actually getting jammed a little higher. Is anything else really moving, okay, with it? And the answer is yeah. I mean, the tech stocks are on the bid in early trade. Unfortunately, okay, if you take a look at ticks, okay, the ticks in the Nasdaq, and again, I don't want to diminish the fact that we've rallied back up a little bit in terms of tech. The ticks, though, are horrendously negative, expressly inside of the Nasdaq. Okay, volatility at this point still incredibly strong. There's, obviously we can look at VIX, but looking at the volatility futures and the volatility futures, let me just clear the deck over here so you guys can see. The volatility futures have upticked. That is not bullish, not bullish. There are times, again, in trade like this, I can see, okay, that NVIDIA is now positive in the day, like great, okay, but the overall marketplace starts to progress lower. Volatility is going higher. So the assumption at this point, okay, it's one little pocket of strength. The idea, though, is NVIDIA is a wild child, but holy crap, this thing could be an incredible reversal on the trading session. We'll see what plays out. Speaking of NVIDIA now is officially in a correction. How ironic that it's flying higher in the midst of this. Okay. Again, not a lot of price action that is playing out thus far. Okay. Look, there's big moves. There's huge volume in the S&Ps. And I caution you, don't try to make any real rash moves in early trade. Take a look, for instance, at like Nasdaq, which is trying to pull its head, above water over here. What's dangerous is this is, 2 minutes away from being an 18,000 product. That's all it's going to take. And that's, you're like, yeah, it's crazy, man. It's 175 points. Okay. It's 2 minutes away from being, this would not surprise me at all to see this thing spin back around and tank. And what is so difficult on a trading session like this, and I cannot reiterate this enough, if you think you have a handle of this, you got to think again. Look how many contracts are going through the S&Ps right now per minute. Again, you need to, at times like this, just be reasonable, sit on your hands and let this kind of play a little bit. Look at the contract size. Okay. And I've said this time and again over the years here at TheoTRADE, that kind of contract size, okay, is a fire hose that's just wide open and no one can hold on to it. It's just literally the marketplace right now. It's all over the place. All right. Everybody that understands algorithmic trading and everybody that understands hedging activity understands one thing. When you're doing 8 to 10,000 contracts a minute, it is a freaking free for all. And ain't nobody going to predict, okay, other than to say, look, on days like this, you got to go with the advanced decline line. There's nowhere to run to, nowhere to hide. This is kind of what we call the quintessential full court press. Like everybody is selling everywhere, but you get these bounces. And look, it's hedging activity, and we can bounce off hedging activity, but you have to go on days like this, okay, with, ticks. Ticks now all of a sudden snap, they're right back in play. You got to go with what the tick is saying. You got to go with advanced decline line. I don't give a damn with you. Look at this. Okay. We found a stock that's higher. It's NVIDIA. It's the only thing in the entire S&P 100. Okay. That's higher. And I don't think it's going to remain higher, but whatever. But we're still locked in a range. Okay. If this range breaks higher or lower, that's when things are going to get a little crazy in the marketplace. And again, it just, you can't even look at like this wider chart. You actually have to zoom in right here, you know, and kind of get a handle on it. So Microsoft right now is off by about 1%. The Nasdaq is only down 1%, and that implies that damage, it hasn't even been inflicted. Like this is like skinning your knee. This could turn into a really, really significant trading session, but we're not there yet. You know, I also want to reiterate in terms of like overall market conditions on a day that were correlated like this, overall market conditions, that is the dollar. Holy crap. Okay. The dollar is totally reversed, breaking out to the upside. We're looking at a 105 print that's imminent on the dollar. That's one of the more bearish things you're going to see because the whole world right now is running to buy dollar. Okay. If you're looking at this as well, you're probably like, oh, gold's barely getting damaged with the dollar up. Okay. Huge. The dollar's almost up $1. Okay. You don't usually see the dollar move this big. For those of you that don't look at the dollar on a day-to-day basis, you will see some moves that are this big, but you're a couple minutes into a trading session and the whole world wants to buy dollar. Look at the dollar a little bit on a day like today as like volatility. Okay. If you're taking a little bit of a temperature of the marketplace, okay, it's hot. It's really, really hot. It's some pretty wild trade in there. Anyway, the dollar is ripping this morning. Speaking of ripping, I'm keep watching volatility. It's definitely since the cash opens right here at 630, kind of heading a little bit higher, but the S&Ps have not broken down. So again, trade at times, you have to kind of let it evolve, and again, I'm not discounting the ability for the marketplace, okay, to make a move higher either. Like I don't want to discount that ability. If we come rallying back up though, and the S&Ps are only down like, 45, 50, you still have this risk of us rolling back over on the day. And you're going to have that risk constantly on top of you today with a negative advanced decline line and just, big, big, ugly volume over here. So again, not as exciting as a lot of people probably hoped for following the CPI. We'll talk about the broader number here momentarily. By the way, look at some of these candles in here. These are, they're huge. He's just trading 51.95 all the way to 52.02. That's a 7-point move, and they're moving in 4, 5, and 7-point increments. So this is the highest we have now been since the cash session opened. Okay, you're on a little bit of a rally. That rally unequivocally has tech involved in it. Right? Microsoft, as I was saying though, if Microsoft looks like it still could roll right over. Apple, interestingly enough, has actually rolled over. Google, which is unimpeded, okay, it has a little bit of a bid under it. Everything that you're seeing in the S&Ps, at least from my perspective here, okay, you have a little bit of Amazon, but a whole lot of NVIDIA and Meta. Okay, that's actually what's leading the charge, and it's kind of ironic because the last 2 days we're seeing big sell side activity. Meta and NVIDIA saw some pretty good sized sell side activity. Might I, this could trade nicely on the day. This could be a decent setup. It could be expensive though. The volatility is still sky high. Yeah. If you get involved in something like this, the bid offer spreads are too wide right now. Forget it. Okay. I'm trading one of the most liquid products here. It's Meta. Bid offer spreads 25, 30 cents wide. If these tighten up in the next couple of moments, I'm missing it already, but whatever. This looks like the whole marketplace is going to roll over. And as it does, and now I'm starting to get a little bit better feel for it. We look like, when I said we're going to roll over, we look like we're going to sell back off. And in doing so, the attempt at any bid to the marketplace being sold into from now is going to be ugly. Okay. If Meta comes down big. So, hold on to that thought because you were just basically at highs of the session. And that happened. Okay. That is a huge move. You have an 11-point S&P move in 1 minute. Hold on 12,000 S&P contracts. Okay, it's getting real out there. And again, you don't see me in a day like this. I spend time in a day like this typically looking at positions. Can I take anything off? Right? Can I bail out of anything? You can see I've got calls and Catapult that are actually doing rather well. I'm going to go over here some inner circle. Again, some call positions. They're doing well. They're almost on the dance floor to be closed. You're up like 30%. That's kind of the dance floor to be closed. Looking around, this is actually the Ultima portfolio here. Oh, that's having a day. So the Ultima portfolio is doing obviously well in a marketplace that's down. Speaking of down, and again, I want to quantify this. Okay, we'll come back and look at some positions here momentarily. Again, by the way, one of the things I'm doing, I'm sifting through here, but I'm really just looking at some of my delta. Right, I'm aggregating still to close to 2,000 negative deltas in the spiders. My position would be doing a lot better today if not for Nvidia and Meta. Again, I'm a big believer though that we're going to roll back over on the day at this point. Anyway, let's gain a little perspective here. All right. Somebody said one of their Catapult calls closed in the pre-market. That is unusual. Bear with me here for a second. It's stand-up time. I gotta stand up. I can't sit. I can't sit, man. All right. Yeah, this is going to be an interesting trade. Meta is pretty critical in today's trading session, along with Nvidia, because you're looking at those two products and they're recovering a little bit. You look at Microsoft; it's actually lows of the session. Obviously, Microsoft and Apple are going to mean more even than Nvidia and Meta, but Nvidia and Meta, there's the opportunity to trade on an intraday basis. To me, actually lies in those underlyings. Look at there's some big hits though going on in here. Costco, okay, taking another hit. It's only 1%. It's right in line with markets. Okay, what I'm looking for right now is outsized moves. Boeing is actually completely breaking. I do have a Boeing Catapult on. Okay, see if I can actually find. I have a lot of accounts now over Tasty. There's a Boeing Catapult on. I just want to take a quick glance at here. That one okay to go. And then apologize. I'm trying to find all the different portfolios. We're okay in here. Yeah, I was looking for somebody was mentioning that they had a call close. That must have been one you did on your own. All right, with that. So spools are down some 65 handles. One of the perspectives I want to give you right now, and I was talking about this literally last week. Last week, we had one very precipitous sell-off right here. But, the eventuality and, what happens is, whatever, we rallied literally right back up the next day. It's fine, okay? One thing that you're not going to rally back up from, a statistically significant move, okay? We are right now not seeing a statistically significant move. People, it's 1%. I don't give a damn whether that's 70 points. You have to get into your head on a trading session like this, okay? This is not to be bullish or bearish, okay? But in a trading session like this, okay, we all are very aware of where the lower edge of the expected move happens to be, okay? To me, the highest probability for trading, and we end up right here, okay, at the 51.15, whatever. Okay, that I would actually suggest that that's a pretty good probability. At some point today, we may actually see the 51.15. Now, granted, okay, we're more than a hop, skip, and a jump off of that. Now, the S&Ps at that point, they have to fall another, 30, 35 points. That's big. That would actually bring the S&Ps down what? 100. If the S&Ps are down 100, okay, they're facing very close at that point to a 2% move. All right, the reason I'm bringing this into scope is you don't get any real significance in the marketplace until you hit a 3% move, okay? And it has been an incredibly long time. By the way, none of this constitutes that this has to happen. Market could rally back up, whatever. It's been a long time since we've seen a 3% move. And I said the exact same thing last week. Okay. And again, the only reason I'm bringing that to you is just to prepare you for what that's going to look like. I mean, the S&Ps would basically be moving 150 points. So right now, you're looking at the marketplace and we're down just about 1%, 1.2%. Great. You got to understand a 50-point move is about 1%. So it's about a 150-point move in the S&Ps. That would even take us through the lower edge of the expected move and then some. The move, though, that you're seeing on the screen right now, okay, again, it's fairly nominal. However, we do at this point, if you'll kind of follow me along over here, this is a 30-day 1 hour, 30-day 1 hour. We do look like we're hitting at this point, maybe, because it's the 5,200 even, maybe that's a big level. Okay, we seem to actually trade back there over here for quite considerable period of time. But I'll be honest, like I wouldn't read too deeply into any like type of support resistance right now. I know that people like to assign levels, but in the midst of some volatility, and you're seeing some volatility, okay, check your baggage at the door. No one gives a crap, what levels you're looking at. Not when we're doing, look at the contract size in here. All right. It's getting real out there. And that contract size speaks incredible volumes that even in the face of like NVIDIA, which is now up, okay, considerably on the day, it's up, 1.6% on the day. None of that crap matters. Okay. They'll turn this thing right back around. And you have to realize that NVIDIA now is, this thing starts to sell back off. Boy, you pull out the pin and the dominoes are going to start to fall. NVIDIA is holding this marketplace where it presently is. Like the Nasdaq is still very close to session lows, and that's with Meta and NVIDIA up at the exact same time. Okay, Microsoft and Apple are just kind of undermining even more, and now you're starting to get play in Amazon to the downside. Amazon looks like it's going to break. So I was trying to tee up a trade a little earlier here. I don't like the bid offer spreads right now. I apologize. I keep bringing it up, but I don't think I'm going to jump on it. I think Meta has a really good shot. Okay. This could easily be a $500 stock by day's end. Okay. Again, it easily could be a $500 stock, which is, it's only a move to here by day's end. And I do want to get into that. I'm going to let this one play out a little bit. By the way, I don't care. No, whatever. Meta's up, $1 just since I said that. Doesn't make a difference. Okay. We rally, you know what the risks are in here. It's one of the things though that it's so fierce to have to trade is like the bid offer spread in here is brutal, just brutal right now. And that's, clearly that's going to be indicative of some of the heavy volatility that we're seeing today. Speaking of volatility, okay, let's cruise over to NVIDIA again for a second. I'm going to be very, picky about positions as I look for stuff today. By the way, NVIDIA, they are just rushing this marketplace with call buyers. Okay. This is an all out, and again, when people call it buy the dip, it almost like infuriates me because it's just call buying. Okay. They're going after the dispersion trade today, which makes a lot of sense because the volatility in the S&Ps is up. You're getting divergence in here. Okay. It's a big freaking trade. But I got to tell you, this doesn't roll over today, I'd be shocked. What I mean by that, quite simply, is at some point in the day, NVIDIA starts to sell back off and pushes the S&Ps into some much more devastating territory. And that's the kind of trade that I'm looking for here in Meta. So I keep jumping back to Meta and I'm looking at a higher delta. The higher delta, bid offer spreads are still wide. I can go after a 52 delta. I don't like to do this. Okay. I usually like a higher delta in this case, but I'm just going to have to place a bid and see if it, wow, that filled fast. Okay. You're screwed when it fills that fast. So I'll copy this and I'll put it down below. This trade has a lot of risk though. I'm just going to let you know right now. This is an intraday. Whoops. Intraday trade on Meta. Yeah, that's all I'll put in there. What I'm actually looking for is Meta to revert back down. We'll see if it plays out. Okay. Look, I'm going to tell you right now what your risks are. You buy this little monkey here, okay, for let's say 675, I paid 665, whatever. If okay, we rally by 5 points, it's going to be worth about 440. If we sell off by about 5 points, it's going to be worth about 970. Go with what's on your screen. Don't worry about a vol crush in here. Don't even calculate the vol crush. And that's it. Okay. And then you go, so what do you do with a trade like this? Just hold it for a portion of the day. We're not going to time this thing perfectly. There's no timing in here. Okay. If you're not comfortable with risks at this point, do not do this trade. Okay. If you're not comfortable, making or losing at minimum, what I just showed you, at least $200 to $300 of risk in this trade. If you're not comfortable with that, simply don't do it. The opportunity in here though is we could revert back down. We could be down $10, and your 665 could be worth like 13, 14 bucks easily in trade like this. On the flip side, if we rally, well, it's already rallied to some extent. I think if we rally, the craziest, it could be up 750. You could lose about half that $6. Remember, you can't go, this $6 can't go to zero. This option, it's a Wednesday. The option still has, Thursday and Friday. Now, we are not holding this trade though overnight. I'm not going to hold the trade overnight. I don't care what you think of the marketplace. We're not going to trade, into something that's like complete and total hopium. And of course, somebody's going to say, why didn't you do it in NVIDIA? I didn't do it in NVIDIA because that's like a $15 or $20 option. I think that really limits the number of people that can do it. So anyway, with that, I also like the idea of the meta trade because I was looking at this and somebody even mentioned it in chat. It's at basically the lower edge of the expected move, and it rallied off of it. That's exactly the kind of thing where, well, let's see if it reverts back down. But do I know anything in Meta? I do not. I don't know anything in Meta. All I know at this point is you got a marketplace that's incredibly highly correlated. You got a marketplace that has tried to rally out just a little bit, but the contract size in here just reeks of heavy volatility. We're doing almost 10,000 contracts a minute, reeks of heavy volatility. And in a situation like this, eventually you see these horrendous negative ticks, which by the way, have gotten better, but we've been riding on some pretty rough negative ticks all day. There are some signs and glimmers of hope over here. But then you look at stuff like the dollar thing is almost at highs. Okay. The bonds have reverted back down a little bit. Okay. There's a lot of bearish things going on the screen. Let's let the market do its thing and see if it goes, like if the S&Ps go to the lower edge of the expected move, okay, you're going to kill it in Meta. And that's the whole idea. It's totally worth, to me, totally worth $300-400 of risk in Meta. Because if I am right in Meta, I'm not going to make 300 or 400. I'm probably going to make, you might be able to make $600-700 in a trade like that if it, rolls back over. And again, there's things in the screen I can control. I can control what my risk is. I know exactly what it is. I can control, the fact that I already see the, heavy volatility, heavy, negative ticks throughout the course of the morning. Bonds are actually reverting back down. Okay. It's good risk reward at this point, but it's an expensive trade. I like it. By the way, all the rotation in the world is not going to bring back, somebody was mentioning about rotating into the Magnificent Seven. You're not rotating into a Microsoft. Clearly, you're not rotating into Apple. It's at lows of the day. This is exactly the crap that I like. Google, very close to lows of the day. Sure, you could be buying that, but Amazon, though, is an interesting one, too. Amazon is basically 1 day removed from its all-time high. This could be an incredibly viable catapult at some point as well. I'm just not sure I want to step into that because in here, this is some big crossfire that you're going to get caught in. If you are a rather experienced trader, you go ahead and fire into this, but I'm going to just tell you guys, look, these trading sessions, I know that people look at this and they're like, oh, this is the opportunity I've been waiting for. What's the opportunity? What have you been waiting for? Maybe there's some sell side activity, but the opportunity on days like this, you can get your head taken off. Okay. There's huge contract size. Okay. No one really has a great feel other than, of course, if you're on the super secret list that just gets information earlier. If you guys missed that article, there's a great article that came out about a couple of the big banks, Citadel, that happened to be getting the jobs number like a couple days before the jobs number came out. That's going on. But I've always made the argument. I was actually laughing about that article because I've always made the argument, even if I had the news in my hand the day before anybody else, I'm not sure I could actually say like, oh yeah, the market's going to go higher, the market's going to go lower. So it's quite ironic. But yeah, I could care less about stuff like that. I mean, I think it's a little bit infuriating though to find out that somebody does have information. Okay, no one will be charged in a crime. It's not illegal if they say it's not illegal. Yeah, super user. Yeah, you guys apparently read the same exact article too. All right, onward. More Amazon shoppers are scamming sellers with fraudulent returns. Okay. They're talking about my wife. they're totally talking about my wife. She returns more stuff, I think, than she actually buys in there. I'm not even sure how that's possible. Amazon is just, it's garbage. I would actually rather buy like on Temu at this point. At least I know Temu is going to be garbage. Okay. But Amazon is just, oh man, it's the worst stuff I've ever gotten. Even my even my Eclipse classes, okay, that were, super secret 5-star rated were absolute pieces of crap. Okay. They were certified pieces of crap. Um, anyway, here's the point to where I think if the S&Ps are going to roll over, you might start to see that selling right now. So as saying earlier, you come in a day like this, and apologies, I'm looking at some positions too. You come in a day like this, you're like, yeah, we're going down. Okay. Heroes are not made on big days. Okay. These are the kind of days where, as I said earlier, kind of sit on your hands, use in a trading session like this. There's a phrase that a buddy of mine used to use all the time that I worked with for a long time, really close to him, Steve Quirk, who actually he runs Robinhood now. So he used to say, okay, alligator arms, alligator arms. He used to scream that all the time. We traded together. So it basically meant, okay, shorten up your arms. Try not to reach for the mouse too often. Alligator arms. Don't do anything crazy. Don't do anything stupid at this point. It also reminds me of a situation where we duct taped a grown individual to the office chair so he wouldn't do anything stupid during a period of heavy volatility. That happened, people. That happened. Yeah. Anyway, he used to call it alligator arms. Was a big guy too that we duct taped. Big. Okay. Anyway, I like that. Trex arms. It's alligator arms. You need to have alligator arms in a day like this. Okay. I mean, again, I put forth one little trade. No idea if this is going to work. Okay. And again, you don't you go out on trades like this and you just take little stabs. Okay. Some pay off, some of them don't. But if you keep doing the same thing that has a huge risk reward, a favorable risk reward, it'll make money. It might take, multiple occurrences. If you're going to be in this business, though, you got to understand it's never about one trade. It's got to be about the law of, large numbers. And that is after 8, 10, or 15 trades, that's when you're going to actually justify whether something works. Okay. I mean, I've done thousands and thousands of trades like I've done in Meta. And some of you guys have been here for years, have seen exactly that. I'll get up to the plate and I'll strike out 3 times in a row. And then we have one hit and you're like, that one is out of the park. And that's the way I'll trade. I like doing that on an intraday basis. And the reason I like doing that on an intraday basis is you can follow it. You can definitely follow it. By the way, somebody was asking what the trade on Meta is. I wouldn't get into it here. Meta's already moved down like, almost $2 since we executed. So just sit tight. Maybe get another opportunity. Maybe Meta bids up. Okay. I don't have that feel for a tape like this. And again, there's one thing I like saying this. I don't care who you are and where you go to. When you're doing this contract size, okay, we're clear into. I mean, look, it's starting to finally quiet down a little bit. We're still doing over 6,000 contracts a minute. No bun, no button, no how has a feel for this. Okay, and as I say constantly, the fire hose wide open. That's what's going on here right now. The candles every minute that comes through. Don't you see anything inordinately large about this? 6, 8, even 10 handles in 1 minute. That crap isn't normal. Okay. I don't even have ticks on the screen. I have ticks on the other screen because I know that ticks, they're just riding negative this morning, which is all that's going to do is the negative tick is just going to continue to kind of put pressure to markets. It's not a heavy negative tick, but they're just, riding on a negative tick. Okay. You had divergence in NVIDIA to the upside. NVIDIA might be fading a little bit here. As soon as trade runs out of, call buying power, this thing could cave in. And that would probably take Nasdaq with it. The scary thing in Nasdaq is its performance since the open. Right now we're unchanged since the open in Nasdaq. I mean, literally you're within what 15, 20 handles of where we opened in Nasdaq this morning. Okay, and again, the important point over here is you're seeing the Nasdaq, and again, I want to just make sure that everybody understands here. You're seeing the Nasdaq; it's up nominally on the morning, again, 10 or 15 points, but at the same time, you realize Nvidia's rallied. Okay, Meta had rallied, but what's going on? Microsoft is still hurting it, and Apple is hurting it, and Tesla is even, taking a little bit of a hit this morning. So we are seeing some attempts at rotation in here, but it's nothing that's really going to cause much of a move yet in Nasdaq to the upside or the downside. Okay, you got to be careful though, because Microsoft, this thing actually cresting into new lows will take the Nasdaq actually down. I'm rather surprised that we didn't hit the big number of 18,000 inside of Nasdaq. I really am. This morning, I assumed that we were going to clip right into 18,000. Got to realize we're 170 points away from that right now. Maybe it doesn't happen. Anyway, less than impressive this morning with the S&Ps. Okay, look at this. Ticks actually turned positive. They're coming back, but the advanced decline line is still absolutely hideous. I'm also surprised that Walmart's up. That could be opportunistic. That could be a good in-out spread. Okay, we're still seeing some rotations in here. Look at VVIX. It's flying. So, this is, to me, a big warning shot. You have volatility at highs in VVIX. You have volatility basically at highs in the vol futures. It just downticked a little bit. So I'm just not feeling all that warm and fuzzy. Okay. Even if we rally back up, and I said this earlier, even if we rally back up, there's still this probability of coming back over, on the day. Speaking of which, right now, this is the daily expected move in the SPX. Daily expected move today was $46, and you're basically on the daily expected move. Meanwhile, let's look at some individual stocks. There are some stocks in the news today. One of the ones that, I was thinking about this earlier today, but let's go over to Intel. Okay. Oh, all right, Intel, big sell side activity. For those of you that haven't heard, Intel actually has chips that are going to be out that will not only rival, but even eclipse, if you will, NVIDIA's performance. And I'm actually surprised to see this thing down as significantly as it is. There's a major announcement about it. Okay. This could be opportunistic. Okay. But it has to fall more. The volume has to surge. I think we have to get through the next earnings cycle. You will hear more out of me about Intel in days and weeks to come. Again, I think it could be opportunistic. If you look at it over 5 years, I think it's got some room to move to the downside, but nevertheless, I have been both long and short Intel in recent years. Okay, I've been on the short side of Intel and I have been on the long side of Intel in the last couple of years. Here's one though that again I believe it's going to be opportunistic, but at this point I'm surprised it's not reacting to any of the news out. Let it fall at this point. That's all you can do. Starbucks. I wanted to come into Starbucks. Also fairly critical. If you look back over the last 5 years, ironically looks a little bit like Intel, but Starbucks at this point, you have an $86 stock. Let it go. Let it go at this point. Here's one where, again, we have been both long and short. I have covered this position even more recently. My account statement is more than 7 days, but if I go back, I don't know, like 200 days, you will see that I've actually covered the stock. I covered my stock though here in January at 92 and change. Covered meaning I closed a short position, 92 and change right in this neighborhood here. Meanwhile, it's actually finally broken down even further. This one also, again, this could be a long road to the downside. I'll look for more opportunities in here. I wanted to bring a couple of these up because there are significant moves down in both Intel and Starbucks in a marketplace that's effectively at all-time highs. Okay, I mean, there's a lot of stocks that are just getting annihilated in this. Apple is right there with it. Apple, by the way, in the year-to-date percentage is now down about 10% in the year-to-date. You can't even imagine, like I couldn't have, that the S&Ps basically are sitting near all-time highs with Apple down this far. I've said that many times before. For those of you, whatever, it's a double top. Okay, it's the golden arches. So I have no feel for here in Apple other than to say, okay, it's right at a fairly critical level. And that critical level is not just here or here or here. It's way back. I mean, you can look at this level in Apple and recognize losing 170. This could be a long road to the downside. And at this point, Apple, okay, has not impeded upon progress of the broader S&Ps to any significant amount. It will. Okay, I warn you, if Apple continues to break over here, it is going to impede upon what the Nasdaq is capable of. Speaking of Nasdaq, we are literally right now where we opened the trading session this morning down about 200 handles on Nasdaq. We're not having that progression much to the upside. You look at the cash open. The cash open in the S&Ps, we started here, we're trading here. Okay, what does that really mean? We're less than 10 points to the upside, which means squat in the midst of volatility. You're on over a $50, $50 expected move for just today and $90 expected move for the week. So as I said to you though, this could be kind of a boring session to begin with. All right, onward from there. More news, Taiwan Semiconductor. Okay, I think a lot of people are obviously looking at this stock, which is, here, let's pull this up in a 5-year, by far and away all-time highs. Okay, there's nothing I'm going to do in here. Earnings are actually coming out very soon. Again, I got a lot of emails though about Taiwan Semiconductor. The other thing I was looking at in Taiwan Semiconductor, it's trading today because there's some news, but liquidity, I kind of call liquidity into question a little bit on that one. Okay, closing that up a little bit. Okay, again, I think Walmart could be opportunistic. The big bid to the upside in Walmart. Look at this. I mean, Walmart, it's one of the few stocks it's being rotated into unquestionably. You have to think about this in the broader picture though. Okay. Inflation's here right now. Inflation's coming back. I'm surprised that Walmart is bid. Speaking of Walmart, let's actually go look at the Fed Watch tool for just a moment. Okay. I'm sure that myself, maybe Brandon will also bring this up, but if you haven't seen this yet, in May, the May meeting, by the way, there's a May 1st meeting coming. There's like basically 100% chance they're not going to cut rates. Check out June. June was all but assured. 80% chance now that they're not going to cut in June. First time you even see like a glimmer of hope. Check this crap out. That is freaking amazing. Even in July now. By the way, this is the first time I'm seeing it since I knew that June. I saw June this morning go up to 80% chance of no cut. We're now over almost a 56% chance of no cut into July. And yeah, I'm smiling about this one because you're 8 weeks removed from a cut was assured in March. Okay. There was no cut in March. There was no cut in May. There's not going to be a cut in June. And I'll be damned, but I don't think there's even going to be a cut in July. The number of cuts this year, the first time it becomes a real even possibility is September. Okay. The November meeting, they are finally pricing in a cut in November. You might be down now, okay, to 1 or 2 cuts this year, if at all. I think that the Fed has been ridiculously premature in discussing interest rate cuts. Okay. I said this 2 weeks ago and I'll say it again, right? For all intents and purpose, higher for longer, we're probably closer to a rate increase than a rate decrease. Okay. If you're going to hear some Fed speak and it may sound like that, they have got to get downright hostile with inflation. Okay. There's and by the way, looking at the probabilities in here, there's still a rather high probability of interest rate cuts at some point this year. Even the discussion of a rate cut was premature. That unto itself can ignite inflation. So they made a critical mistake in there. Don't worry, their mistake is, transitory. The Fed never makes mistakes. By the way, who cares if they make a mistake? Who cares? Doesn't matter. You're going to trade. It's going to be volatility. I love when people are like, they made a mistake. Okay. The only mistake they've made is they've said transitory. That was completely, totally wrong. By the way, you could point out all the mistakes they made. So what? They jam rates up after that transitory comment. Now they're actually prematurely discussing rate cuts. Okay. It's another mistake. It doesn't make a difference. It doesn't make a difference. So what are they going to do at this point? Okay. Now they have to actually threaten the markets a little bit. They have got to get inflation under control. And of course, this is where people start getting political. It's not going to happen during an election year. It's not going to do this. Okay. But need I remind anybody here that Jerome Powell was not an appointee from the present administration. He was an appointee from the prior administration. So I don't want to hear all the crap about, they're aligning the Fed with this. Look, Jerome Powell, okay, this is it for him. He's in his last appointed, position of being chairman of the Fed. He doesn't give a damn. Okay, they're going to do whatever they possibly can to get inflation under control. Politics be damned. They don't care at this point. I think the only one that probably has Jerome Powell's ear is probably Janet Yellen, who definitely does work for the administration. Nevertheless, okay, they're looking at this, and this is terrifying right now to the Treasury. It's terrifying because higher for longer, the US debt is going to explode. Okay. I mean, by the way, when I say that, look what's going on with gold right now. You realize the dollar is ripping to the upside, ripping, and gold is actually up. Okay, that is not good. This is going to be problematic. All right, S&Ps right now, highs of the session. We are at highs of the session. As I said, very likely to be some attempts at some rallies today. We're going to laugh, we're going to cry, see how this goes. This is some breakout volume though right now. You're going to see a continuation of a little bit of a rally back into the S&Ps. Before you get, let's not get crazy. Before you get too crazy, the advanced decline line still sucks. The ticks are absolutely positive, but they're not that strong. So the problem you've got on a day like this, contract size here, people is so freaking deep. You can't read more than 2 minutes. This thing could just get crushed right back down. So just calm yourself down. It's what I call some, as I said a moment ago, it's like breakout volume to the upside. You can't trust the tape as far as you can throw it in a day like this. And if I haven't stated that enough times in the last 50 minutes, I'll state it again. Unfortunately, this is kind of a little bit of a boring session, at least for me. I like to get my hands dirty, but on a day like this, contract size is big, bid offer spreads are wide, things are getting a little crazy in here. Volatility definitely downticked though there. That was the first real attempt, or what we're seeing right now is the first real attempt at a rally. If volatility continues to crush, the market could, in fact, go higher, but very, very early to make any calls on that particular front. All right, some other stocks that were in the news. I know that there were some airlines with earnings. So Delta, okay, Delta, They're holding it together, literally with like duct tape, the planes. So Delta has earnings. There's a little bit of a bid under it, up about 2%, which is pretty good in a day like today. How's this actually affecting some of the other airline stocks? Okay, it's not. American Airlines is basically flat. Okay, United, up about 2%. Again, has a little bit of a bid under it. As we come into earnings season, look, I think that the volatility in today's marketplace kind of, is going to upstage what's going on in some of the airline stocks. But what is going to start to get interesting is like JP Morgan, which is down just nominally today. I mean, 0.4% in a day that the market's down 1%. JP Morgan has earnings on Friday morning. I may take some shots in this tomorrow. I might do some expected move butterflies. We'll see. It really depends. Okay. It's very like JP Morgan trade is dependent upon what overall volatility in the marketplace looks like. And right now I'm disappointed. I'm disappointed, not that we, went one way or the other. Okay. I'm disappointed that, we've had like a 10, 15 point range in this kind of volatility. It's not really opening a lot of doors for me anyway, for some intraday trade. Okay. But I've seen a lot of these trading sessions before. And again, I know that we have the ability to rally here. Okay. But you've got some heavy inflation. The marketplace has been just massively, massively wrong. Yes, the S&Ps are up 15, but a 15-point move to the upside over here on this kind of volume, it just doesn't mean anything to me, and it might mean something to you, people that read, just the chart without really digging into the volume over here. That's okay, but looking exclusively at that price action, now we're almost 20 points higher. Okay, but you're 20 points higher with almost a $50 daily expected move. That doesn't mean crap. You can have 2 minutes or right back down, okay, to session lows. And that's the problem with volatility, is this is exactly the trading session right here, right now. This right here is where people get their heads ripped off. Okay. They're not seeing that products like, look at Microsoft. Okay. This is debasing the whole marketplace. I don't give a crap what you say. It's debasing the whole marketplace. Okay. It's just chopping the legs out from the marketplace. It's just digging a hole into the marketplace. So what's going to happen is Microsoft, okay, but you don't see Microsoft. All you see, okay, is right here. All you see is the S&P is lifting a little bit. If you don't have Microsoft, you don't have a market. Okay. Apple, got a little bit of a bid under it. It's fine. Interestingly enough, Amazon, though, still looks like it's in a threatening posture. Google, still very close to session lows. Okay. These are products that just matter. These are the products that are going to move the marketplace. The financials have actually come back quite readily. Okay. But this is where you can get your head taken off. And again, I don't want to bear up on everybody, but don't jump in front of these markets. It's far too early to kind of handicap some of that. With that, so I'll look for opportunities today, but I want to be very, very clear. If you ask me about selling premium today, absolutely unequivocally, there could be opportunities, but we're nowhere near them yet. Okay. I want to say this again. If you ask me today about selling options premium, okay, I am down for selling premium. Always want to trade some premium. Okay. But we're nowhere near that. And when I say that, I mean, like, look, right now, we're just halfway home to what is a lower edge of an expected move. We're literally stuck between a rock and a hard place. Okay. Rally back up to unchanged in the week. I don't know. Okay. Come back down here. You start getting to the lower edge of this expected move. It gets interesting. But I'll remind you, still, there's not enough big trading sessions lately. Okay. We have come to this area where almost like the Pavlovian response, bell goes off, you expect a rally. Just be careful with that notion in a trading session like this. Even if you get a rally out of it, okay, it's sketchy. It's very, very sketchy in early trade. There's glimmers of hope in what is otherwise a completely correlated advanced decline line over here. Okay. the remainder of the day, I'll also remind you in here, petroleum status report isn't going to do squat. We do have FOMC minutes though to contend with. Okay. And that's actually my final reminder to everybody today is if you thought, okay, that, yeah, the crab fest is over, you got Fed minutes to deal with. And those Fed minutes are completely depreciated at this point because inflation is upticking. But it's another critical catalyst late in the trading session. And what that critical catalyst is going to do is going to keep the implied volatility relatively high. It's going to keep traders staved off from making big positioning mistakes, meaning that you may see a huge amount of volume, but I'm telling you right now, okay, with this heavier amount of implied volatility, FOMC minutes coming, okay, it's really going to be hard to justify taking a lot of directional bias on an intraday basis here. So I'll keep you guys abridged if I get out of that meta trade at any point today. Up a couple pennies from where I put it on, whatever. Okay, who cares? Up 50 bucks, leave it alone. All right, I'm not here for 50 bucks. I'm in meta, okay, for meta to be down like $10 in the day. And if it is, okay, score. If it's not, is what it is. I think it's a really, really viable risk reward though. So I am going to bring on the professor. Jeff Bierman's coming on here momentarily. Again, cannot stress enough. Keep your head in the game on a day like this. I know that this is less than kind of what you expected in the first hour. You know, S&Ps at one point were actually down 80 handles, 80 points. Okay, after the CPI number came out, we have, I wouldn't say rallied back. We've meandered a little bit higher. Okay, this is where you can get dropped though right on your head. Okay, just don't have a lot of preconceived notions about what the next hour or two are going to look like. Trade is going to be fast. It's going to be furious. You have FOMC minutes to contend with. And one of the last things I'll also show you is recognize bonds are now back down to lows of the session. So the marketplace is getting, again, debased a little bit. Microsoft bonds, there's a lot of really bearish things going on the screen. And you need to keep that in mind. Even if we do rally, okay, there's still an incredible probability that we flip back around. You need only look at yesterday's trading session to recognize, okay, this is one pissed off marketplace. This thing sold off yesterday, 40 handles, rallied all the way back, okay, in the last minute or two of trade, shot by 15 points, okay? Just be aware, volatility is here. Stay tuned. Jeff Bierman's going to be coming on right now.